Hey everyone, welcome back to Corporate Decoder, the place where we expose the secrets hiding in plain sight within company reports. And today we're diving into First Bancorp's latest filing to see what's really going on with their dividend strategy. Now you might think this is just another boring announcement, but sometimes the smallest details can reveal a lot about a company's confidence and its plans for the future. We'll break down exactly what this means for you as an investor, or even just someone curious about how big companies operate. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below, so join us there for more discussions. Alright, let's get straight to it. First Bancorp, a company based in North Carolina, recently put out a report detailing a pretty significant announcement about their dividends. What they've told us is pretty straightforward. On September 12th of 2025, First Bancorp announced that their board of directors decided to give out a dividend. Now, a dividend is basically a way for a company to share its profits directly with its shareholders, the people who own a piece of the company. Specifically, they're paying out 23 cents for every share of common stock that people own. This dividend is set to be paid out on October 25th, and the important date for those who want to receive it is September 30th. That's called the record date. You have to own the shares by that date to get the dividend. Now, 23 cents a share might not sound like a lot, and for many investors, it's not the primary reason they invest. However, the act of paying a dividend and the amount can tell us a story. For a company like First Bancorp, whose stock trades on the Nasdaq Global Select Market under the ticker FBNC, this is a regular occurrence, but the consistency and the amount can signal a lot. Think about it this way. If a company is consistently paying a dividend, especially one that's stable or growing, it suggests they are profitable enough to not need all their earnings to reinvest back into the business. This can be a sign of a mature, stable company. On the other hand, if a company suddenly cuts or suspends its dividend, it often signals financial trouble or a shift in strategy where they desperately need cash for operations or growth. In this case, First Bancorp is simply announcing a standard dividend payment. The key here is the signal it sends. By declaring this dividend, they're telling the market that their operations are healthy enough to return some cash to investors. It's like saying, we're making enough money and have enough cash on hand that we don't need every single dollar to grow the business right now. We can afford to share some with you. It's easy to get lost in the technical terms of these reports, like the file numbers or identifying numbers. But what really matters is the underlying business activity. The fact that they're issuing a press release for this specific event and it's captured in an 8K filing with the Securities and Exchange Commission shows its importance in communicating financial actions to the public. Now, while this filing is quite brief and focused solely on the dividend announcement, other filings from First Bancorp would contain the detailed financial statements. Those would show us their revenues, their expenses, their profits, their cash flow, and much more. From those, we could truly assess the sustainability of this dividend and the overall health of the bank. For example, we'd look at their net income, their earnings per share, and their dividend payout ratio. A payout ratio that's too high might mean they're